Good morning, good afternoon, and good evening to all AFI Network colleagues joining us from across different time zones. On behalf of the Alliance for Financial Inclusion and the Digital Financial Services Working Group, we warmly welcome you to the 5th editions of the DFS Working Group Policy Conversation Series. The Policy Conversation Series is a flagship virtual platform designed to foster peer learning, thought leadership, and practical policy exchange among central banks, financial regulators, and financial supervisors. PCS sessions are closed, member-only engagement, allowing for candid dialogue, evidence-based reflection, and collaborative ideation among policymakers, supervisors, and technical experts. Today's session will look at the evolving relationship between fast payment systems and retail central bank digital currencies, or CBDCs, and it draws on comparative evidence from Nigeria, Ghana, Brazil, and India. We'll use the research findings to support an open policy discussion on how the system may complement, compete, or converge, and what that means for policy choices, system design, and implementation priorities. But before we go to the technical session, let me introduce myself. I'm Ira Prilianti, I'm Senior Policy Analyst, and I'm your MC for today. Just quick housekeeping notes for all of you. First, we encourage active participation throughout the dialogue. Please keep your comments respectful, constructive, and inclusive, as every perspective adds value to our shared learning today. The chat box is open for everyone. Please feel free to introduce yourself, share your experiences and insights at any time. This is a safe space for peer learning among FE community. If you have questions for our speaker, kindly submit them through the Q&A panel in the Zoom toolbar. We will address your questions in the dedicated Q&A segment later. And if you'd like to verbally share an insight or ask questions, please use the raise hand feature. And when possible, our facilitator will invite you to unmute and you might join the discussion. To maintain clear audio for everyone, please keep your microphone muted unless you are speaking. Feel free to unmute when you are invited to contribute. And lastly, Zoom AI's captions are available. You can turn them on using caption or CC button at the bottom of your Zoom's interface or toolbar. Do note that while translation may be not perfect, they are there to support broader language accessibility. Now, before we begin, let's take a quick group photo. Kindly turn on your camera so we can capture a snapshot to commemorate this session. So colleagues, please turn on your camera. Excellent. I'll count. I'll still wait for more colleagues to join us for the group photo. We would like to see your smile today. Okay, 5 more seconds. Okay, then I'll count 1, 2, 3. 1, 2, 3. Okay. Wait a moment. One more time. 1, 2, 3. Okay. Excellent. The last one. 1, 2, 3. Amazing. Thank you, everyone. You may turn off the camera. And I'm pleased now to introduce today's moderator, Ms. Courtney Michelle Nicholson, Senior Analyst for Research and Policy at the Financial Services Commission of Jamaica. Ms. Courtney brings over 12 years of financial regulatory experience across Caribbean regulators, including work on AML/CFT, cybersecurity, licensing, and supervisory methodology. She will begin the session with a brief context setting to frame today's discussion, and will then moderate the conversations and Q&A. So without further ado, Ms. Courtney, the floor is yours.
Thank you, Ira. Good morning, good afternoon, good evening. Welcome, colleagues. Thank you for joining this session today for AFI's Digital Financial Services Working Group. As Ira would have introduced, I'm Courtney Michelle, and I've spent the better part of my career working across Caribbean financial regulations. So the questions that we're tackling today sits at the very core of my professional world and frankly keep me up at night often. The title of our session asks whether fast payment systems and retail central bank digital currencies complement each other, compete with each other, or ultimately converge. But underneath this framing sits a more fundamental policy question, one that I suspect many of us are actively wrestling with. When a country has already made meaningful progress with a well-designed fast payment system, what additional value does a CBDC bring? And conversely, for countries that have moved early on CBDCs, what does that experience reveal about the broader ecosystem that needs to exist around them? These are not hypothetical questions. They are live design choices with real resource implications. And the research we're about to hear examines them through empirical evidence drawn from 4 countries that have each taken a distinct path. That's Brazil, India, Ghana, and Nigeria. Let me briefly paint a picture of each of these paths. Brazil built Pix into one of the most successful instant payment platforms in the world, now processing upwards of 7 billion transactions a month and reaching over 90% of the adult population. India's unified payments interface has achieved a scale and interoperability that countries around the world are actively working to replicate. Ghana and Nigeria have developed dynamic mobile money and instant payment ecosystems that are driving their financial inclusion across their populations. And Nigeria has gone a step further, launching the e-Naira as one of only a handful of live retail CBDCs globally, giving it a unique layered perspective on how these instruments coexist. Of each of these countries has generated insights that the rest of us can learn from, not because any single model is the right one, but because the diversity of approaches gives us richer evidence base to draw on as we make our own decisions. Now, let me offer some context from Jamaica's experience to add another dimension to the conversation. Jamaica was among the first countries in the world to put a retail CBDC into live circulation when we launched Jamdex in 2022. Our central bank, the Bank of Jamaica, designed the system with offline functionality, one-to-one backing with the Jamaican dollar, user privacy protections, and merchant incentive programs. We have seen small but steady growth in the transaction values using CBDC, but we've seen strong satisfaction among rural users who previously faced long journeys to access basic financial services. And importantly, a growing body of operational knowledge about what it takes to run a live CBDC in a small island developing state. However, and this is where it gets interesting for today's discussion, Jamdex still represents roughly 0.1% of total currency in circulation. What Jamaica's journey has also shown us is that launching a CBDC is not a destination. It is the beginning of a much larger conversation about ecosystem development, institutional coordination, and the sequencing of public and private sector roles. Our experience gives us a practitioner's lens on questions that many of us are considering from the design stage. And I hope that perspective is useful to our attendees today. So, as we listen to today's findings, I would encourage you to hold a few threads in mind as considerations that each of us can apply in our own context. First, sequencing and value proposition. Does it matter whether fast payment rails are mature before a CBDC is introduced? And critically, where fast payments are already delivering efficiency, inclusion, and formalization gains, what concrete evidence does a CBDC add and under what conditions? Second, institutional alignment. How do we structure the ecosystem so that central banks, commercial banks, fintechs, and mobile money operators each have a clear role and a reason to participate, particularly when some innovations reshape existing business models? Third, convergence. Are we heading toward a future where the distinction between a fast payment and a CBDC becomes invisible to the end user? And if so, what does that mean for how we design, invest in, and regulate these systems today? And finally, the inclusion and formalization promise. One of the strongest theoretical cases for CBDCs is their potential to bring informal economic activity into the formal financial system. The evidence we're about to hear will help us examine where and how that is materializing in practice and what enabling conditions make the difference. I want to acknowledge that our member countries are at very different stages of this journey. Some are in early contemplation, others are piloting or actively designing, and some are navigating the operational realities of live systems. The value of this session is that the research spans that spectrum, and I hope it gives each of us practical insights to inform our next steps in this realm. And with that, I will go ahead and introduce our speaker for today. Gabriel Bizama is a researcher at the University of Bern. Before joining Bern, he led the financial inclusion agenda at the Ministry of Treasury of Argentina, where he designed and implemented the National Financial Inclusion Strategy, the National Plan for Financial Inclusions, and the MSMEs Finance Policy Framework. He also consulted for the World Bank, UNDP, and UNHCR on financial inclusion and innovation. In the private sector, Gabriel supported the design and implementation of blockchain-based solutions, including cash transfers, cross-border payments, and CBDCs at the Stellar Development Foundation. He was an advisor at the Sahamati Foundation and the Open Finance Implementation Entity in India, and led regulator analysis for inclusion insurance at Chubb Group of Insurance Companies. So without further ado, I will introduce our today's speaker. I'll hand over to our speaker, Mr. Gabriel Bizama. Thank you.
Thank you very much for the kind introduction, Courtney. And first of all, I would like to thank AFI for the opportunity to present the results of the research in this working group meeting of the Digital Financial Services Working Group. So with that, I think that we can start. I will try to keep it really short because I know that maybe the conversation, basically the Q&A section is going to be more interesting than my presentation. So actually, I will try to keep it short. Ira, if you want to go to the next slide. So basically, the goal of the research is to understand with data what is the value proposition of a CBDC, of a central bank digital currency in countries where you have a well-advanced or developed fast payment system that is already implemented. So there is literature and there are a lot of discussions in terms of what could be the value proposition of a CBDC in terms of modernizing the financial sector, making payments more efficient and affordable. There is also a question regarding financial inclusion and also reducing informality, mainly in emerging economies. If you go to some data from a study from the BIS, and this is a survey that the BIS does every I think that 2 years. The last one was published last year. About 93 central banks participated in the survey, and from that, 91% of central banks, so basically 85, were exploring either a retail CBDC or a wholesale CBDC or both. And actually, if you look at central banks in emerging economies, in terms of the policy motivations on why to explore the possibility of issuing a CBDC, improving domestic payments efficiency and also payment safety were the main drivers of the CBDC exploration work. But also, again, in emerging economies, in terms of retail CBDC, the policy or the exploration is driven by the aim of enhancing financial inclusion. So again, the question is understanding with data what is working well with mobile money in Ghana and Nigeria, what was working well with Pix in Brazil and UPI in India, and actually also what was not working that well, and with that try to understand whether a CBDC could eventually address those shortcomings. Next. So we're not going to go through the framework because this has a lot, but actually what I have done is with the data that I have collected, quantitative and qualitative data, and we are going to see that in the next slide. I have run the data using I would say like a three bucket framework. On the one hand, what are the elements that the public is demanding in terms of trust, security, and privacy? Secondly, convenience, added value and access, affordability and programmability. And then basically, what elements should a regulatory framework have as an enabler of fast payment systems? And the last bucket in terms of product features or product components that actually the private sector needs to design and launch in order to satisfy the demand of the public. Again, we're not going to go through the framework in detail because we're not going to have the time, but again, it's good to step back a little bit and see what is the framework that I have used. If we go to the next slide. How I approach the research, again, this is empirical research, so actually I have collected quantitative and qualitative data through a survey of a sample of 1,000 individuals and merchants. For merchants, these in the 4 countries, these are mainly micro merchants. So, for example, if you go to the demographics of India, actually, I think that 80% of the merchants that actually were the 30% of the total of the sample. So 300 merchants, 80% of them are micro merchants. And then I have complement the quantitative data, the survey data with more qualitative data. So basically, focus groups in urban, semi-urban, and rural areas, just to again clarify issues that were coming up in the quantitative phase. And then I have conducted semi-structured interviews with the public and the private sector, so basically central banks, other national authorities, those entities that are managing the national payment infrastructure, commercial banks, fintechs, payment services providers, mobile money providers, and also international organizations. The targeted group for the research is basically users and non-users of fast payment systems. And here again, with the non-users, what I was trying to understand is why people were not using, for example, Pix in Brazil or mobile money in Ghana or Nigeria or UPI. And then adults with a smartphone, a future basic phone that actually they allow them to make a payment, small farmers, women, and again, micro merchants. If we go to the next slide. Let's go through the findings. So in terms of opportunities of fast payment system, what the data is saying that basically fast payment systems are being used to provide access to the formal financial system and also due to its convenience. So basically, a well-designed CBDC system eventually could complement a current fast payment system and contribute to provide further access. And a couple of examples are government to person payments, so basically subsidies, and also wage payments in specific industries, which are typically conducted in cash. Examples are basically food markets or even like textile industries, for example, in India. In terms of government to person payments, for example, a CBDC could be a good solution to replace cash. So a lot of programs still are being conducted by cash, basically cash transfers. For example, also data that is coming up from UPI in India in terms of digitalization of wages was a recent reported by the sample on how they would be encouraged to use UPI. So actually, if I'm receiving my salary through UPI, I would use UPI. If not, if I receive my salary in cash, it would be a little bit complex for me to go to basically an ATM to do a cash in or go to an agent to do a cash in. In terms of affordability, also data is saying that fast payment systems are helping to reduce the cost of merchant acceptance of payments and also money transfers. So, for example, data from PIX, the average cost of this payment scheme is 0.3% in comparison to 1.5% of debit cards and between 3 to 5% of credit cards. So actually, micro merchants and merchants in general, they were reporting that actually they're using PIX because of the cost. A well-designed CBDC could also assist reducing the cost of fast payment systems and also fostering competition in concentrated markets. So this is one policy motivation that actually central banks are looking. If you have like a market that is very concentrated in terms of the market share, maybe a CBDC with introduction of new players, for example, wallets, can be another option instead of basically the most used payment solution. In terms of, and if we go, no, I think that we're still in this slide. Another potential or another benefit of fast payment system is instant settlement. That are mainly providing, so basically fast payment systems are mainly providing T+1 settlement of transactions. So a well-designed CBDC could also improve the settlement by providing real-time liquidation and settlement of transactions. And for example, this is one policy motivation being analyzed by the RBI with the rupee in India. So we are going to see some data as well on what is the value proposition of instant settlement for micro merchants. If we go to the next slide. Before getting into the data on the opportunities and also shortcomings, I really want to start with this slide. I really like this slide. So basically, I asked the survey participants, and this is the same slide or the same question for all the countries, the 4 countries. What you are seeing here is the data from India, from UPI. But actually, what I ask to participants is which is the form of money which they trust the most. And basically, for example, for India, the blue piece is actually the completely trust option. So still cash is the most trusted form of money, followed by e-money, electronic money, and then commercial money. To be honest, I was a little surprised about the level of trust on the rupee, considering that actually this is in a pilot stage and only 5 million people are accessing the rupee in India, a population of 1.4 billion people. But actually, stepping back a little bit, results are very similar in other countries where still cash is the most trusted form of money. In Nigeria and Brazil, commercial money is more trusted than electronic money. And actually, this also reflects the strength of the banking sector in these two countries. But actually, when you try to understand why cash, and actually this is a good example in terms of why the focus groups, or what is the relevance of focus groups, is actually to clarify these kind of questions. Again, the data is stating that cash is the most trusted form of money. Why? And actually, in the four countries, participants of the focus groups, they were saying, first of all, cash is free to accept for merchants, so I don't need to pay any fees to any provider. It settles instantly. I don't need to wait T+1, so for the next day to get the money in my account. It doesn't require connectivity. So basically, if I'm a consumer, I don't need to have like data on my phone just to make a payment. And this is not only internet data, it's also mobile data. But most importantly, this is something that came up in all the focus groups, is that actually cash is tangible. So actually, it's with me in my pockets. I see it. Basically, it's with me. I have it, and actually, I don't need to rely on a third party, a mobile money account, a wallet, or a bank that actually is holding the money on my behalf. I also ask in the focus groups whether having a directly a claim to the central bank is something that people value. First of all, you need to explain what is having a directly a claim to the central bank. And actually, after the explanation, many participants react positively to this. And this is mainly because of bad experiences in the past with bank failures. And this could be like commercial banks, but also there were a lot of references to microfinance entities basically failing in the past, and people losing money. Also, participants highlight that actually they would trust a CBDC since this is issued by the central bank. So there's still trust on central banks. And then another further aspect that was highlighted in the focus groups was basically how users value offline payments. And we're going to see some data on that next. So if we go to the next slide. In terms of the opportunities, again, access to the formal financial sector. So this is data of UPI in India, and actually, what I really like from this is data indicating that fast payment systems, in this case again UPI, is providing access to a deposit account. This could be again a bank account, a mobile money account, or a wallet. So what I really like is basically the chart on the right, where actually 10% of the sample were saying that actually they don't have a bank account, but they have a digital wallet. And this is, in a sense, data backing up the statement that innovation is contributing to financial inclusion. So if you go to data in Brazil, this is 5%, so it's still a lot. However, if you do some disaggregated data analysis, in India, for example, the 10% goes down to 3.9 for women and 3% for the elderly. So there's still a lot of work to be done for specific targeted groups. So this is important to note. If we go to the next slide. Also, in terms of opportunities and expanding the access to the formal financial services, also data from UPI. A well-designed CBDC could complement fast payment systems and help expanding the access of formal financial services. For example, 41% of the sample is a UPI user, but actually 45% have never used UPI. And in my interview with NPCI, which is the National Payments Corporation of India, which is managing UPI, actually, this is a reflection of the data that NPCI has, that actually only 40% of the adult population in India is a monthly active user of UPI. So you still have like 60%, and this is 600 million people in India that they have never used or they don't use UPI. And actually, in my interview as well with the fintech department of the RBI, one of the things that they highlight in their work on the Rupee pilot is again, the Rupee could complement UPI and increase the usage of digital payments and formal financial services. and eventually help transition in India to a cashless economy. So again, a CBDC could complement fast payment systems. If we go to the next one, we are starting to see data in terms of convenience. So for example, in Brazil, convenience is one of the main benefits of using PIX. So ease of use, it is convenient since I have an account in my phone, and also the affordability aspect. The costs are coming up as the top reasons for usage of PIX. And actually, results are very similar in other countries. If we go to the next slide, in terms of CBDC implementation in area, basically the answers are the same. So basically, users are adopting the area because of it is convenience and also the ease of use and the cost. So again, the question is if these are the same reasons as using, for example, mobile money, why I would use Dinara if I already have mobile money? That is a question that actually is good to be done. If we go to the next slide. In terms of merchant payments adoption, and again, cost is an important aspect, specifically for micro merchants. And this is data from PIX in Brazil that actually suggests that PIX is now being accepted more than cash. This is similar results in Ghana with mobile money. So basically, merchants are accepting more mobile money rather than cash. In India and in Nigeria, micro merchants still accept cash the most. And actually, when you ask in the focus groups why, for example, in India, micro merchants, they were really open to highlight all the tax implications of accepting UPI. So basically, one thing that they were highlighting is that they operate with their personal UPI account instead of opening a business account. And the other thing that they do is a common practice is splitting up the payments in several accounts to mitigate the tax burden, basically GST. So if I'm running a family business, I will accept payments through my personal UPI account, but I will use my wife UPI account and maybe also my daughters and my son UPI accounts, just to again mitigate the tax burden. If we go to the next slide. In terms of the ranking, in terms of the order of preference, again, we're still with PIX, which actually is the preferred means of payments acceptance by micro merchants in Brazil, followed by cash. Again, this is similar in Ghana with mobile money, but not the case in Nigeria and Ghana. If we go to the next slide, the question was again in the next slide, in terms of what are the main aspects affecting the order of preference in all the countries. And actually, ease of access, safety of funds, and costs are the main aspects affecting this, why I'm accepting cash or PIX, for example. This is not, I was not surprised about this, but actually programmability and privacy rank lower. So these are aspects that actually I don't know if this is awareness or what, but actually these are not aspects that micro merchants they value a lot. In relation to cost, this is something that actually authorities and regulators are revisiting in terms of the business model and cost structure of different kind of payment schemes. This is the case, for example, of UPI and also Dinara in Nigeria, where actually the cost structure is zero for P2P and also merchant payments. And maybe you can argue from a user perspective that this is positive. Again, if I'm a consumer or a merchant, I'm not paying any fees. But actually then there are no incentives for the private sector to design products, since there is no revenue streams. So in India, there is an ongoing discussion between the public and the private sector in terms of maybe replicating PICs and basically including a bandit approach where still payments up to certain amount basically you have a fee. So you can include, for example, categories. So for micro merchants up to certain amount, they're still free. So actually, one of the concerns of MPCI and also the RBI is, well, I don't want to impact the level of adoption of UPI. So they're still free, but up to that amount, basically you have some level of fees just to incentivize the private sector to build a solution using UPI or even like PIX or Dinara or mobile money. If we move to the next one, in terms of also instant settlement of transactions, this is also a very important aspect for merchants, specifically for micro merchants. This is data for PIX. Almost 90% of the sample would consider switching to PIX after knowing that you get the money instantly and you don't need to wait for T+1, so for the next day to get the money. This is not the case in India, where actually it seems that micro merchants are very, very sensitive to costs, so they're still comfortable with T+1 due to the cost of real-time settlement of transactions. So they need to pay an extra fee to get the funds instantly, and actually they prefer not to pay the fees and wait for the next day. So this is something also interesting because, again, stepping back, the RBI, one of the policy motivations of the rupee exploration is actually instant settlement. So again, this seems to be more like a business issue rather than actually an infrastructure issue. If we go to the next slide, so basically up to now, we have seen where are the opportunities of a CBDC in comparison to fast payment systems. Let's try to look a little bit at the shortcomings of fast payment systems and whether a CBDC could address those. First of all, in terms of convenience and access, we can start with connectivity and offline payments. So mobile and internet network connectivity, as you all know, is a significant challenge in emerging economies. Data is telling that in the 4 countries. A well-designed CBDC that could incorporate an offline payment feature could eventually help promoting further access. I think that the question remains in terms of whether an offline feature could be implemented without a CBDC infrastructure. And I think that the answer is yes. We have seen in the past mobile money providers offering USSD in Nigeria, Ghana, and India, and in many other countries. We also know that actually USSD is facing challenges in terms of still relying on mobile network connectivity, which it could not be reliable in many parts of the country, mainly remote and rural areas, but also in urban areas where you have like a density of population. And also what data is suggesting is actually USSD is not working because of high fees, and that is another thing to consider. In terms of women financial inclusion, also data is indicating that women still have difficulties accessing the formal financial sector. India, Nigeria, and Ghana, data is telling that actually women, they don't feel is safe sending money or making a payment using their phone. This seems to be not an infrastructure issue, but more like a regulation policy driven. So basically a CBDC system would not help addressing this if you don't have like independent or complementary policy and regulations just to tackle this shortcoming. In terms of interoperability, also data is indicating that there are still interoperability challenges in India with UPI, and also in Nigeria with Dinara. We're going to see some data on this in the next slides. The same with instant settlement of transactions. This is, again, seems to be more like a business issue. And also there is an issue in terms of managing the liquidity risk. The tax implication that I was mentioning before, reported by my micro merchants. This also seems to be more like a policy and regulation issue rather than an infrastructure issue. So basically, policymakers and tax authorities, they need to work together designing a simplified tax regime. And actually, again, this is not an infrastructure issue, so a CBDC per se is not going to solve this shortcoming. If we move forward to the next slide, there are other shortcomings that are related to trust on security and fraud issues, also in terms of privacy, complaints handling, and awareness. We're going to see some data on this in the next slides. And also in terms of programmability, this could be a value proposition due to the limited use cases of programmable payments in the current fast payment systems. If we move to the data, we're going to see some examples of this, but actually one of the things that I want to highlight is most, or the data what it's telling is most of the challenges are regulation and policy driven rather than infrastructure driven. So again, stepping back, would a well-designed CBDC address those? First shortcoming, connectivity, peaks. Basically, this is when you ask why you stop using pigs, lack of internet and mobile connectivity is the first reason why people stop using pigs. There is also interesting data in terms of financial incentives. So basically, people using pigs because I got a cashback or discounts in a retailer. If you go to the next slide, also regarding pigs in Brazil, more than 70% of the sample saying that they would be interested in using offline payments. So again, offline could be a value proposition of a CBDC. If we go to the next slide, in terms of interoperability, one of the largest providers of UPI is still closed loop, although they're working with the RBI in order to open up the system. So actually, fast payment systems are still, or UPI with still facing some issues in terms of interoperability. Would a CBDC address this? If we go to the next slide, we are going to see that actually the Naira in Nigeria is also facing some interoperability challenges. It's not easy to fund an Naira wallet from your bank account or your mobile money account. Again, this seems to be more like a regulatory-driven issue rather than a technical issue. It's not like an infrastructure issue. If we go to the next slide, one of the main shortcomings together with connectivity is security and fraud issues through, for example, social engineering practices. So this is also data from UPI, where actually 26% of the sample reported that security and fraud issues together with unauthorized access to my account were the main reasons why they're not using UPI. And again, if you see some disaggregated data, basically women and users in T3, so basically tier 3 and tier 4 locations, rural and remote areas, basically this 26% goes up to 30% and 42% for tier 3 and T4 locations. There are multiple examples of fraud. I think that we all know this. Basically, KYC updates through WhatsApp, cashbacks links through WhatsApp, impersonation, digital arrest. Well, many examples of this. If we go to the next slide, and I know we have only 10 minutes, so I will try to be really quick with this. Basically, security and fraud issues are related to privacy. But actually, when you ask, this is also data from India, when 40% of the sample reported that actually they were victim of a data breach. And actually, this data breach data is lower in Brazil, is higher in Nigeria and Ghana, amounting to 60%. So the question is in the focus groups how users are handling fraud. In Brazil, for example, the central bank is working in a regulatory framework for recovery of funds. And actually, this they have data that actually fraudsters are being able to transfer funds in multiple accounts, up to 25 transfers in an average time of 9 minutes, and actually then they cash out the money from the system. So again, the central bank is working with the private sector in traceability, on a traceability tool to basically make sure that you can trace money real time. And actually, there are also other examples from India, Nigeria, and Ghana on this that actually I'm happy to discuss offline due to the times constraints. I would like to again. I want to leave some time for the Q&As. So maybe we can go to the finance slide. I think that is the last one. If you go next, Ira, this is the last one, and we can discuss others. I think that you got the slides, so actually happy to go through questions offline. But actually, what data is telling is fast payment systems are being used and accepted by individuals and merchants mainly because of convenience and cost. Uh, Basically, in India, Nigeria, still there is a cash preference in comparison to Brazil and Ghana. Lack of trust due to connectivity, and this is mobile and internet connectivity, and also security fraud issues related to data privacy are the most significant challenges for further adoption. But then you have further challenges, shortcomings in terms of ineffective complaints handling mechanisms, digital and financial literacy in terms of specific targeted groups, tax implications for micro merchants, also lack of merchant acceptance of fast payment systems. So again, a well-designed CBDC could complement fast payment systems, could eventually foster competition, could with an offline component could help addressing connectivity as well. However, some shortcomings in terms of interoperability, in terms of fraud through social engineering, privacy, complaints handling, awareness, liquidity risk, tax implications are more regulation and policy driven rather than dependent to infrastructure. So basically, a CBDC per se is not going to solve those. So again, the question remains whether central banks should focus on addressing all these shortcomings by improving and developing PIX, UPI, and mobile money, rather than going through an implementation of a CBDC. I will stop here. I know that we have only 6 minutes, so I will go back to you, Courtney.
Thank you, Gabriel. Well, I have not seen any questions pop up in the chat, but I do want to pose a couple of them that I have picked up from our presentation today. So one of those is, I'm sorry, are we hearing me echo? I'm just wanted to check.
Yeah, there's a little echo, Courtney. But we hear you clearly anyway, so you can proceed. Yeah.
Right. So one question that has come up, just based on what we've discussed on the policy versus infrastructure conclusion, and that is that, the research finds that most shortcomings of fast payment systems are regulatory rather than infrastructure problems. So for jurisdictions that have already launched a retail CBDC, what's the realistic path forward? Should they redirect resources into fixing the fast payment systems regulatory environment? Or is there a way for that the CBDC can be repositioned to do the work that the fast payment systems cannot?
That is a really good question. I think that actually what data is saying is CBDCs can complement fast payment systems. So actually, I think that you can eventually have both. And actually, for example, in terms of opportunities, a CBDC could help on the connectivity shortcoming. Again, the question there is whether you need a CBDC for that. Again, USSD is one example. I know that it's not working 100% well in most of the countries. Then actually in terms of government to person payments, so basically subsidies, this is something that actually in some countries right now cash transfers are being done by cash. The question is whether they could be done by mobile money, for example. But I think that again, then we end up with the same shortcomings that actually we see in both mobile money and CBDC. So basically, people would prefer cash because in some places, merchants they will not accept mobile money. And again, maybe they are not going to accept mobile money because of the cost. So actually, then you end up in the same circle in terms of, well, these are issues that actually are not dependent on infrastructure and more depending on regulatory and policy motivations that actually the central banks and also national authorities they can work on instead of jumping very quickly to implementing a new infrastructure.
Okay, thank you so much. And another question I want to throw at you is regarding the uptake of CBDCs. You would have mentioned that, roughly 5 million users out of the population of 1.4 billion in India has taken on using the e-rupee. And I've noted a similar, I would have commented in the beginning that 0.1% of currency in circulation in Jamaica is reflected in CBDCs. So given that they're competing against, entrenched and well-functioning fast-paced systems, what strategy could a central bank pursue to drive meaningful adoption? Is it a matter of distinctive use cases, such as the offline functionality, the programmable G2P transfers, merchants, what are the merchant side incentives, or is it just slow uptake itself, a signal that the value proposition needs to be fundamentally rethought?
I mean that is also a very very interesting question. Just to clarify it on India, this is data from the pilot, so actually this is not already implemented. So I think that is the design of that was on purpose. So actually they wanted to keep it the access limited to see how it goes. But actually I think that the data that you share in terms of Jamaica, that 0.1% of currency in circulation is only the CBDCs is a really good indication in terms of the usage of an implementation of CBDCs. I think that is a variety of reasons. I think that what you mentioned in terms of understanding very well with data what are the shortcomings of the payment scheme, and actually then trying to understand where a CBDC is going to address those. That is very important. I think that every country has a different context. So actually, it depends on the context of the country. But actually, I think that the word that I would done if I would be a central bank is trying to do like a diagnosis of what is not working in my payment system, and then I will have a clarity in terms of where are the shortcomings, and then basically do an analysis and assessment whether CBDC is going to help with addressing those, or actually these are more like again. Merchants are not accepting digital payments because they need to pay taxes. So I mean, this is something that is coming up in the data. So maybe if you implement a CBDC just to address that, well, I mean, this is not an infrastructure issue. Is basically more like a policy issue. How do we address those? Well, you need this is another question and another conversation. But actually, I think that is the exercise that I would do if I would be a central bank.
Okay, thanks for that, Gabriel. Ira, could you assist me? Just let me know if we can take one question from the chat. Or before I give before we
Hi, Courtney. So
hi.
I think we have two questions, if I'm not mistaken, from Abdulrahman and also from Faisa. I think we can take both.
Okay.
Colleagues, do bear with us. I think we actually planned for 9:15, so we still have roughly about 10 more minutes. So we can still take a few more questions. And I should also mention, dear colleagues, feel free to raise your hands to ask a question or to even react and share your own experience if you've actually considered or looked at this question as well. If you have an instant payment system or a fast payment system, do you think you should still go ahead with retail CBDC? What's your thoughts and what's your experience like? Feel free to share your experience as well. Thank you.
All right, thank you, Yemi. I'm going to pull a question from the chat. So, in the context of fast payment systems and the potential introduction of retail CBDCs, how do you assess the case for implementing a centralized fraud monitoring framework at the national level? Specifically, what should be the role of the central bank in such a model? How can it be balanced with real-time fraud detection, with data privacy and operational risks? And what lessons can be drawn from countries like the ones presented today in designing an effective and scalable approach?
That is a really good question because actually, again, security related to privacy and fraud and also connectivity is actually are the main challenges in that the data is telling in the four countries. I think that I have given the example of what the Central Bank of Brazil is doing right now in terms of working together with the Bank Association and also the FinTech Association in order to for the private sector to design a traceability tool to ensure that actually fraudulent funds can be traced in real time. I've been told that this is going to be live this year. Still, yeah, the public and the private sector in Brazil are working on that. Another example is in India, and actually this is going back to your question. This is coordination of not only the private sector and the central bank, but also involves other national authorities. So this is the RBI together with the Ministry of Finance, the Ministry of Home Affairs, MPCI, together with the private sector, basically banks, payment service providers, wallets. What they have done is put in place a cyber crime number. So actually you can, if you're a user, you can claim the recovery of funds through this number. And actually there is something that is called the golden hour, where financial entities are required to submit a response on where the funds are. And actually, in my interviews with the Minister of Finance, MPCI, but also the private sector, so banks, and basically this also came up in the focus groups. So again, you have in a sense some level of evidence that actually this is it seems that is working well, that is being effective, although the initiative is in a very early stage of development. But again, I was surprised that actually not only those who basically build the framework, which is actually the public sector with the collaboration of the private sector, but I was really surprised that actually users in the focus groups were highlighting that this has been effective. So people that they were victim of a fraud, calling the number and getting the funds in the golden hour in this hour that actually are required by the regulation.
All right, thanks for that, Gabriel. And another question from the chat is why is programmability pitched as a strong use case for CBDC? Can it not be managed through instant payment systems?
And the answer is yes. And this is the same as offline. So basically, we already have like programmable payments right now. We have direct debits. We have like you can program regular transactions. So this is something that we have right now. I think that what is the argument here is actually right now we have limited use cases. So maybe a CBDC could eventually expand the use cases of programmable payments. That doesn't mean that actually right now mobile money providers or UPI providers or Pix providers, they can do the same. One thing that actually I don't know if I went through this slide because of the time. One thing that actually in the data what was telling is that in terms of use cases of programmability, people were really interested on mainly two. One is, for example, SME lending. So if I'm a business, if I reach certain revenue, basically I have already a pre-approved credit line that actually this comes automatically to my account. And then the other one was more related to microinsurance and climate risks, where actually you get the money right away when there is a catastrophic event that could be like a flood or even like drought. Actually, this is already happening right now with parametric insurance. So actually, but I mean, people were interested to know more about, well, can we program those and would that be better than the solution that I have right now?
Okay, thank you, Gabriel. So thank you so much for presenting those findings today. And I just want to leave us with some takeaways. In considering the adoption of CBDCs, diagnose before you build, what we saw presented in the research makes clear that many of the challenges we attribute to payment infrastructure, interoperability, fraud, privacy, complaints handling are in fact regulatory and policy challenges. So I guess before committing to a CBDC, or if you're in the process of adopting a CBDC, central banks should ask honestly whether a new rail is the answer or whether strengthening the existing fast payment systems would deliver more and faster at a lower cost. A second consideration is that if you do build it, make it distinctive. Where a CBDC does move forward, it should also offer what a fast payment system cannot: offline functionality, programmable government to persons payment, and a meaningfully communicated claim on the central bank. Um, Distinctiveness and not novelty will drive relevance. And finally, inclusion will not be solved by issuance alone. The gaps affecting women, the elderly, rural users, and micro merchants are rooted in literacy, trust, tax design, and data, not in the form of the money itself. So closing them requires central banks to work alongside, your finance ministries, tax authorities, the private sector. It requires coordination across various stakeholders, because without that, neither fast payment systems nor CBDCs will reach the people who stand to benefit the most. So I think that was very, very clear from the data that we've seen from Gabriel's presentation, and I thank you so much. Ira, I will turn over to you for final closing remarks.
Thank you so much, Courtney and Dr. Gabriel. Again, if I can't, please request you to react and provide virtual claps for Courtney and Gabriel for the excellent session, colleagues. Thank you very much. Let me share my screen. Okay, without further ado, we'll have evaluation and recap and also announcement from our colleagues, Adeyemi Omotoso, the policy manager. So Adeyemi will speak, and while Adeyemi speak, I would show you the evaluation link and QR. So please give us your 2 or 3 minutes to give us some feedback, so then we will take forward your feedback for the future policy conversation series. So without further ado, Adeyemi Omotoso, the floor is yours.
Thanks, Sarah. And then once again, a big thank you to Dr. Gabriel and Courtney for the excellent conversation. Colleagues, I should say the conversation has not ended, so please feel free, share your thoughts, share your ideas, your comments, reactions you might have you can use the working group WhatsApp group. We can continue the conversation there. And if you have more questions, please do send them through. We would forward this to Gabriel and get you some response to that. And while I provide some quick announcements, might I request Gabriel? I think there are 2 questions on the chat. If you can just have a quick look at them and probably type a quick response to Thelma and Timoy, I think that would be helpful. So, dear colleagues, again, thanks for joining today. As you know, the Policy Conversation series is our informal way to get together to discuss these topics, particularly the priority topics we might not have the opportunity to discuss in person. So again, this is the first in the series this year. We roughly have about 3 to 4 more planned, and we'll be sharing the schedule with you together with the topics and the confirmed speakers shortly. So please do look out for them. The other announcement I'd like to make is we are planning a webinar sometime in May. And again, once we confirm the dates and the details, we will circulate this to you via email and also on the WhatsApp group. So please do look out for it. As you know, we'll be having our in-person working group meeting in June. And I see that colleagues hosting us in Suriname are on the call today. So again, if you've not registered, please take a minute and have your registrations completed. If you have any questions regarding the physical meeting, please reach out to myself or Ira. And on that note, I would like to say a big thank you. The slides for this meeting will be shared and also the recording, so you can again refer back to them later, or you can share them with colleagues that were unfortunately not able to join today. But again, we really want the conversations to continue, and we really want to see what we actually do next as a working group. So if there's a specific need or a specific question emerging out of this conversation that we need to address, do let us know so we can plan towards them and address this together. On that note, I will let you enjoy the rest of your day. For those of you that are still in Africa and Latin America, for colleagues in the Pacific, I will allow you go sleep because I can tell it's past midnight. And for colleagues here in Asia, I'll say good evening to you and enjoy the rest of your night. Again, thank you so much, Courtney, for the excellent moderation. And again, a big thank you to our friend, Dr. Gabriel, for again honoring us today and sharing the findings from your research. Thank you all so much. Please take a minute, complete the evaluation. We really love the feedback, and we'd like to know, again, if you have ideas of what you'd like to discuss next, we would also like to know this. Thank you so much, and back to you, Ira.
Thank you so much, Adeyemi. And yeah, echoing for Adeyemi, so we'll wait for 2 more minutes to close the Zoom. So if you are still filling out the evaluation, we'll wait for you. If you have filled it out, you are free to go. So thank you very much, colleagues. Looking forward to the next DFS working group events, especially the policy conversation series. And thank you very much, Courtney and Gabriel. See you again.